Hello and welcome to my channel Blue Chip Finance. In this video we will discuss about the net present value and other investment criteria or capital budgeting techniques, part 7. And in this video that is the last topic of capital budgeting techniques, and that is equivalent annual annuity. What is equivalent annual annuity? Sometimes there are different options in front of you to choose one suitable option. Your decision depends on the calculation of present values. Or simply we can say that if we have 2 or 3 or 4 or many different conditions to choose some project, and on what basis we choose the project, and the answer is simply the calculation of present values of your expenditures. So for example, in question number 7, a firm can lease a machine for 5 years at a cost of 40,000 annually. So that is your first option, that a firm has an option to get a machine on lease for 5 years at a cost of 40,000 annually. So if a firm choose option number 1, that is to get the machine on lease in 5 years, he will pay $200,000, 40,000 annually. It can instead buy a machine at a cost of 90,000 with annual maintenance expenses of $11,000. The machine will be sold at the end of 5th years for $22,000. Which is the better option if the discount rate is 12%? So in equivalent annual annuity, we choose the better option to invest on the basis of the calculation of present values. So here, first of all, we calculate the present values of the second option. That if we choose the second option, if we buy a machine at a cost of 90,000, so your initial cost will be 90,000 plus what are your expenditures if you invest $90,000 into machine. So your maintenance expenses are 11,000. So 11,000 are your expenses. So 11,000 expenses are similar. This is the same concept which we discussed in the calculation of NPV, that if our cash inflows are similar, then we can use present value of interest factor of annuity. But here remember one thing, that if your maintenance expenses are not similar, then you can use present value interest factor instead of present value interest factor of annuity. So here your expenses are similar, so that is why we are using here PVIFA, and your discount rate is 12%, interest rate is 12%, and time period is 5 years. Time period is 5 years, so N is 5, and minus scrap value. What is your scrap value? 22,000, and present value of your scrap value, simply divide the scrap value with 1 plus I raised to power n, or simply you can say that take the present value of your scrap value. So here your initial cost is 90,000 plus your expenditures, annual expenditures to maintain that machine is 11,000, and PVIFA factor at 12% and 5 years is 3.604, which you calculate here. You can see here that PVIFA at n equals to 5, I equals to 0.12. Apply the formula 1 minus 1 plus I raised to power minus n divided by I, and after putting these values, your PVIFA is 3.604. So apply the factor here and minus, calculate this 22,000 divided by 1 plus 0.12 raised to power 5, and just sum it, and your result is 117,160.61. Now we come to the first option, that a firm can lease a machine for 5 years at a cost of 40,000 annually. So simply your lease expenses, there is not initial cost while choosing a machine on lease, so go directly on expenses, just skip this one, initial cost, and take the present value of interest factor of annuity is 3.604, which we already calculated here, and just multiply this PVIFA with 40,000 expenditures, and your present value of cost in choosing case A or option A is 144160. So option for buying a machine is better than to get on lease, because present values of buying this one 117,160.61 is less than the present values of lease, that is 144,160. So it is very important topic in which we learn to choose the option between 2 or 3 or 4 if we have some different options in front of us and we are going to choose only one option, then present value equivalent annual annuity, or simply we can say that we simply calculate the present value of cost in all the cases, and the least present value cost is most favorable option for us. So that is the last topic of capital budgeting techniques. In next video I will give you some questions for your practice. So stay safe, stay blessed, take care of yourself and the persons around you. Thank you.